Let's bring in Michael. He's here. I got so
Mike.
excited with the size gong. I was gonna hit it, but I
We
can't
can
do
hit the
it right
size
now.
gong for Michael.
Welcome to the show.
Welcome, Michael.
you
We don't
there?
have you up on.
Did I get the gong?
There he
Hey!
is.
Hit it a little harder. Hit the gong
Hit
a
it
little
Hit the
harder.
gong harder.
Hit it a little
Boom,
harder.
Boom, 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 boom.
All right, there we go. That works. Can you guys hear me all right?
Every time.
Oh, we
Every
broke
time.
it. That's what
Yeah.
I was going for. I was hoping
Yeah.
we would break it.
Welcome to the show.
What's going on?
What's up, guys?
You made it to
going
Boston.
on?
He Michael messaged me like maybe 2 hours ago and says I might be in the air, but you
Okay.
made it. And you're at where are you right now?
So this is the Suno studio in
Oh,
Boston.
cool. Very cool.
This is where I guess they have like artists roll through and stuff when they're in town.
Nice, nice.
Yeah. So,
Is Boston
first time
a
I've actually been in
major-
this room.
Is Boston a major music market, or is it more so they're bringing in musicians that are helping improve the models that they're making and the app in general?
I think it is a market, right?
Mhm.
It is a major market, but no, it's not like in LA or in New York. But this is where Suno was founded, right?
Cool.
The founders came out of MIT, Harvard. There's obviously, as you guys know, there's a lot of machine learning research going on in Boston and Cambridge. So that's where the company got started. But I think they had a really smart idea, which was when our artists are going through Boston, which most major artists do, they can use this studio. It's a place to.
That's
place
cool.
To do some
Okay,
stuff.
that makes
Really
sense.
quickly,
They're
can you
touring-
introduce yourself to the stream?
Yeah.
And give us a little backstory on your
the
name.
man who needs no introduction.
Yeah, you're-
but you may
we
as
love
well
you,
do it.
but you're not at that level yet.
Of course. No, I mean, I appreciate you guys bringing me on. Sorry, am I introducing myself? How did
Yes,
this
Yeah,
work?
yes.
yeah,
Yeah,
yeah.
introduce yourself. Tell us what you do now, and then I have a bunch of questions about your career. We'll dive into
All right,
it.
let's do it. What's up, everyone? My name is Michael Mignano. I'm a partner at Lightspeed. I was the co-founder of Anchor,
Yep.
podcasting platform, which is now owned by Spotify. I also recently co-founded a company called Oboe, which is an AI
cool.
education platform.
Awesome.
And yeah, big fan of the pod. Happy to be
Yeah.
one of the early guests. Thanks for
Yeah,
having
I'm
me.
a huge fan of Anchor. I used it for some podcast test I did. Like must have been right when it came out, and I just remember thinking like, man, this takes so much of the headache out of podcasting. 'Cause
Exactly.
You just you could upload it on your phone. I don't think was the original vision. You wanted people to be producing and producing podcasts on their phone and uploading, because that was a button you could just kind of hit record and then boom, it goes out to the RSS feed. But it seemed like it almost became like a prosumer tool pretty quickly, because the podcasting market, it's pretty bifurcated between like people start taking it seriously once they get any sort of traction, right?
Yeah, no, the original vision for Anchor actually was not to be a podcast platform.
Sure.
It was very, very idealistic. We wanted to be a social media platform, like
Sure.
an audio social media.
Yep.
Like think Clubhouse, but a couple years earlier.
Sure.
And what we learned is that social audio is really, really freaking hard.
Yep.
We took a crack at a certain format, take on it that we had, which did like fairly well. I mean, there was like, there were spikes of growth here and there, but overall wasn't working. After a year, we like completely pivoted to another iteration of social audio.
Yeah.
Gave that a year, didn't work. And then what we were hearing from all of our users is, hey, we just want to use these tools to publish podcasts to Apple and Spotify.
Yeah.
And when we did that, it was just like instant PMF from that moment.
So yeah, take us through the story of the company. How big did you get? You raised money, I'm sure. Eventually exit. I want to hear that.
Yeah.
Yeah, and for a little bit of lore, when this was 2018, I had just maybe I was still in college. I hit up Michael and he did a call with me.
No way.
Didn't need to, had no real I mean, it was much more beneficial for me. I was working in doing a bunch of podcast advertising stuff at the time, but thank you to Michael. You always remember the people that like give you 30 minutes of their day, or however long it takes. But yeah, I would love to hear the story again.
Yeah, I mean, so my co-founder and I, Nir Zickerman, we built product at this company called Aviary, and this was around the time that like Instagram was taking off, and people were realizing that you could take and edit photos on your phone, and it could actually look good. Obviously, now that's just a given. Like the camera is the phone, and we sold that business to Adobe, and while we were there, we got really into podcasts.
Yeah.
And we were sort of like sitting around asking ourselves, like, how come nobody has done for photos? How come nobody's done for podcasts what has just been done for photos? And so that was like the original idea. Like, And of course, at this time, it was like 2016, everything was a social network back then. Like Snap was exploding. And we're like, oh, of course, this should be a social network, right?
Yeah.
We should have a feed. We should have a button right at the bottom of the app in the middle. And so that was the original vision. We raised a couple $1 million from folks like BetaWorks and SV Angel and ENIAC and all these guys. And yeah, like I said, we had to go through a couple of different pivots. We raised, I think to answer your question, John, we ended up raising just under 15 million total.
Sure.
We were about 25 people when we exited. We sold to Spotify in 2019.
Did
They
you
actually
ever run
announced
into
two acquisitions on the day, Anchor and Gimlet.
I remember that.
Yeah, I remember that.
Yeah.
Which is
So
like the
back to
cardinal
back.
sin of launches is like if you have two
Yeah.
both very interesting launches, you should just do them
Space
like
them out, yeah.
space them out and like, get the full benefit of each. But
I think I mean, you could probably speak to it more than I can, but it seemed like Spotify really wanted to plant a flag and be like, we are in
Yeah.
podcasting now. So not just
Yeah.
one acquisition. We're taking this seriously. Wait, quick question. Did you ever run into Archie Archibong at Aviary?
Yeah, of course.
I went
Shout
to
out
high school with
Archie
him.
I hope he's listening.
Yeah, I'll
what's
have to
up,
send him this
Archie?
clip. That's awesome. Yeah, he was out in Japan a bunch. Yeah,
that's right.
Good guy.
big in Japan.
Huge in Japan, honestly.
I wanted to ask you about where, as somebody who sold your company to Spotify, worked there for a while, and then now you have a much more sort of, now you're a venture capitalist. But still, I'm sure very opinionated on the Spotify product. How do you, where do you think Spotify's going? We had talked about this a little bit offline. I'd said, and I'd even posted about this of Spotify and YouTube have sort of always been on a collision course. Ultra long form became very important to YouTube, and then they became the biggest podcast platform. And in many ways, like podcasts aren't just replacing radio; they're replacing TV.
Yep.
Right? So it's super important to YouTube, and it feels like a sort of critical battleground for Spotify. But I'd be curious to get kind of your point of view on the overall battle between these, tech giants, right? Spotify feels like a small company, but it's $140 billion market cap. It's a big business. Probably would be well beyond that if Apple Music wasn't, rammed down everybody's throat. But yeah, would love to get like a kind of general market perspective on that.
Yeah. So taking a step back, and I should caveat all this by saying that I haven't been at the company in like 3 years. So this is a pure outsider perspective. But I think the big thing that Spotify has always done well, and they've always believed in, is this notion of bundling, right? Like taking these products and these business lines that they have strengths in, and then bundling them with other new product lines and business lines. And that's honestly why podcasts were so successful for Spotify. If you think back in the day when it was like Spotify head to head with Apple had two separate apps for these things, right? They had music and they had podcasts, two separate apps. And that was a total gift to Spotify.
Yep.
Because Spotify could take the podcasts and put them right next to the music, so you never had to leave the experience. And that's really what kickstarted the whole thing. It's like they had a built-in audience of hundreds of millions of people that were one tap away from podcasts. And I think, maybe to start getting to the question you're asking, I think that's how they've probably thought about video as well. It's like, hey, we have people listening to music. Now we have them listening to podcasts. What if we bundle in video now? And that opens up a whole new market for us. And so the obvious place for them to start was with podcasts, right? Like they have every podcast in the world already. Now let's get these people to add videos to these podcasts. But, again, as an outsider, you have to imagine the next step is you start to see other types of video content on the platform. And even if they can start chipping away a few market share percentage points here and there of YouTube's catalog, that's a big deal for Spotify.
Yeah.
So I think it's a pretty smart move for them.
How do you think about the relentless march of the algorithmically curated feeds in the podcasting world? I think a lot of podcasters are super, super happy that they're in the RSS feeds, and they feel like it's almost as strong as having someone's email address. There's a very high open rate. If you have that RSS feed, your weekly show, you're dropping a weekly thing right at the top of their Apple Podcasts app. And Spotify has a similar feel right now, but you could imagine them going to something that's more algorithmically generated, more variance in the total views. You see this on YouTube where Mr. Beast can be reliable, but for most other creators, it's like a banger and then a flop and then a banger and then a flop. And we all feel this on X when we post. It's very high variance, but you can go really, really big because it's an algorithmic feed. Your podcaster who's built on RSS, pretty hard to all of a sudden have one episode go 10x bigger, but the downside's very protected. Do you think, my question is basically like, if I'm an RSS podcaster and I'm thinking, hey, I want to go to Spotify, this is a little dangerous because I could see them going more algo feed in the future. And then that introduces more volatility to my business. Maybe that's good. Maybe that's bad. What's your read on that?
Yeah, I mean, I think the RSS feed is a very, very controversial thing in podcast land. You have the podcast purists that will live and die by the RSS feed. They will fight you to the death if you tell them that RSS is going to go away.
Yeah.
But on the flip side, like, it has lots of limitations, the RSS feed. Like, it's not like a two-way channel, right? Yep. It's like very limited in terms of the functionality it can ultimately provide. And, I think there's probably no coincidence. Two biggest platforms now for podcasts, Spotify and YouTube, are not really RSS based anymore, right? They're all doing things that layer on top of the format that have nothing to do with RSS. And so, again, I know like the RSS purists are, probably want to murder me right now, but I just don't. I don't know if the format is viable long term as a solution. I think because, like you said, you can get massive distribution on YouTube that you can't get through just like a plain old RSS feed.
Totally.
Yeah, the two things as a creator now, the analytics on the RSS feed are just obviously a joke.
Terrible.
Like, you basically get no analytics.
Yeah.
And then with Spotify is a lot better. But then the distribution, which we're already seeing this with Spotify, we're growing our audience just by nature of being on Spotify versus that's not really happening on Apple. It's sort of us driving other sort of top of funnel growth. But anyways,
it's
an
classic,
exciting time.
It's the classic centralization versus decentralization argument, right? Like,
yeah.
And in most cases, I know people don't want to hear this, but centralization often wins.
Yeah.
Yeah.
What's your take on the pivot to video for most podcasters? We saw a big one today. Invest Like the Best now has video.
No.
I started on video with YouTube. Basically, I never really had a pure audio product. I think the first episode we did was video. We very much enjoy video, but is there any hope for a creator that just wants to stay audio only for the future?
I don't think so, because again, we're talking about Spotify and YouTube being the predominant platforms right now, and we know that those algos, they need the video. They crave the video. I think users got wise to this. Actually, it was during COVID.
Yeah.
People don't realize it was during COVID when, before COVID, people were recording podcasts in studios, in booths, right? Similar to how you guys are now.
Yep.
But they weren't video booths, right? It was just like a microphone and a table. And then COVID, everyone went home, and the way that these shows kept going was through Zoom and Riverside.
So you get video
and
for
so
free.
all these podcasters got video for free, and they were like, oh shit, if I upload this video to YouTube, I get all this distribution.
Yeah.
And now you can't go back. The algo craves the video.
Craves the video. You
that
gotta
makes
feed
sense.
the AI gods.
Talk to us about I'm gonna butcher the name. Oboe. I've only read Oboe. So this is a company you basically incubated. You're a co-founder, but obviously you're still a full-time investor. Maybe talk about that dynamic and then what you guys are working on.
Yeah, recently co-founded this new company with my former Anchor co-founder, Nir Zickerman. He's the CEO. He's running it full-time. I am not full-time on it, as you mentioned. I'm a full-time partner at Lightspeed. Basically, the premise behind Oboe is very, very simple. We the humans, you guys, me, everyone, we have invested many, many billions of dollars over the past couple of years in making machines very, very smart, right, through AI. And we believe with Oboe that it's time for the machines to make the humans smarter. And so this is a company, the premise of AI making humans smarter. You guys have all heard a lot of talk about, a hyped up use case of ChatGPT has been, oh, it's going to be a personalized tutor. It's going to help people learn. ChatGPT is not really built for that. Yes, it's helpful for like one-off tasks. Hey, tell me about this thing. Tell me about this thing. But John, it doesn't know everything you've ever learned, and it doesn't know what your interests are, and it doesn't know what your goals are in, maybe learning a new language or learning about, I don't know, some theory around finance or something. And so that's the basic premise of what Oboe is solving. We have a beta coming very soon. If people want to be the first to check it out, just go to our X Oboe Labs, at Oboe Labs. I'm very, very excited for it. And yeah, I think people are going to really like this product.
Awesome.
Yeah, and you dropped by the PMF or Die Cage to support the players recently, and they're working on a problem that's sort of adjacent. But yeah, maybe, you know, and funny enough, we just before this we had the founder of Synthesis, which is an AI tutor, and so it feels like we're maybe I'm sure maybe people have already done it, but sort of a broader market map around, you know, AI and learning. Maybe
it's
they
kind
exist.
of like we're in the app store moment where there's a bunch of we need to build products around this stuff. We have the new technology, but you know, what is the dominant product form factor for each of these use cases? And so it's a knockout, drag out fight. Good luck out there.
Yeah. What?
I mean, that's it's usually a good sign, right? When
yeah,
like
totally.
A couple things going
and consumers benefit. I mean, everyone benefits. Like you know, you pace of iteration is very fast. You get to test a bunch of things. You get to try new stuff all the time. Everyone, and then you know, at the end, a bunch of people make money, which is great.
Exactly.
How do you think about the pressure? So you're sitting on both sides of the table, right? You're an investor at Lightspeed, getting an opportunity to look at and invest in some of the fastest growing, most exciting companies in the world. You're on the founder side now. Meanwhile, the average founder is being inundated with content around companies going from 0 to 10 or 0 to $100 million in this super short period of time. Meanwhile, you at Anchor, you know, pivoted multiple times and iterated towards this idea and eventually had a fantastic outcome, but it wasn't this sort of straight shot linear. As a founder now, and from the founders that you talk to, is there just sort of this extreme pressure around I need to deliver faster results than ever? And do you think that could have a negative impact on outcomes? Because when I think of Oboe, I think, okay, massive TAM, massive opportunity. This can be a $10 billion plus company if you look at, you know, companies like Duolingo and things like that in the public markets. But I could imagine that you're going to have to sort of iterate in the same way. So what does success look like for you? And what advice do you give founders that are kind of facing that pressure to, you know, put up ridiculous numbers in a really short period of time or be, you know, relegated to the like, you know, sort of not top tier company?
Yeah, we actually talked about this in the PMF or Die cage, in the cage.
In the cage.
With the guys.
In the cage. As one does.
There are a lot of startups right now that are experiencing explosive revenue growth, right? It seems like every week that chart has a new line on it, like you know, 0 to what, you know, the chart I'm talking about. Like
100 million ARR.
Yeah,
6 months, 2 months, 1 day, 0 days.
Yeah. Something we talk a lot about at Lightspeed is like high calorie ARR and low calorie ARR, right? There's a lot of like cheap ARR growth out there, and I think a lot of it has to do with the fact that AI is very magical. People see these products, they're kind of like blown away by them. And they're like, oh, here, take my credit card. Like, I'm happy to pay. But that doesn't necessarily say something about how sticky these products are or how good they are or whether or not these users will actually retain. And so, you know, with a lot of these explosive high ARR companies that we've seen over the past couple of years with AI, it's not really a secret. You guys have probably heard of this as well. Many of them are very, very churny, right? They churn very quickly. A lot of trialing. A lot of like, ooh, I want to experience this magic moment, take my credit card, but then I'm never coming back. And so, you know, the advice I gave to the guys in the cage was, I think we got to remember to continue to pay attention to like the metrics that have always mattered, right? Things like consistent user growth and retention and making sure like the retention cohorts flatten out. They don't just like drop to 0. Because I think people are getting like very, very hung up on this ARR metric, which is great. I mean, it's a business that can go from 0 to 100 in 6 months, phenomenal. But you can't ignore the traditional metrics that tell you whether or not a product is good. And I think that's going to be really
Yeah. So on your side, are you ready to? You obviously started this with your former co-founder. Are you guys ready for? You know, I think you have like good instincts here, but you must be sort of ready to do as many. Hopefully, it's a one shot. You just nail it out the gates. But it sounds like you guys are ready to pivot as many times or sort of adjust the strategy as many times as necessary because it is such a big problem space. There has to be there's definitely $1 billion business in here somewhere, but it still takes work to, find that spot.
Absolutely. I think you got to be willing to pivot. And by the way, that's what we see, like, in places like YC, these companies pivot sometimes like 5 times over the course of 2 weeks. The pivot is so important. And, the other thing I would say is not only do you have to pivot, but you have to move faster. than ever. I mean, the thing that I felt when I went in the cage with the guys was I've never seen people move this fast. These guys have been in there 2 weeks. They showed me what they're working on, and I'm not going to reveal it. They told me not to reveal it, but the amount of progress they've made in 2 weeks, I've never seen anything like it.
Yeah.
Like they literally went from not having a line of code to having a very fully featured app, iOS app. They're about to ship to the App Store.
Yeah.
There's just never been competition like this before.
Yeah.
It's insane. I interviewed this guy, Josh Moore, on my podcast. He started this app called Wave. Have you guys seen this app, Wave?
I haven't.
It's kind of like Renola. It's like a note-taking thing with AI.
Sure.
Cool.
It's doing like 5 million ARR. He built it by himself. Just like he had never coded before in his life.
That's amazing.
And he uses AI to not only teach him how to code, but to write the code and to generate the marketing. And it's just the level of intensity and competition right now is unlike anything we've ever seen.
That's fantastic.
Switching over to putting on your investor hat, wanted to give you an opportunity. Lightspeed's big investor in XAI. And has been just one of the most active investors across the foundation model landscape. I'd love to, besides the obvious, you just sort of invest in Elon companies and, you tend to do well. What was like sort of more of, without going into, go into however much detail you want, but like break down kind of the memo on the XAI thesis.
Yeah. I mean, a lot of what has been reported publicly, aligns with our thinking and our thesis, and that, yes, betting on Elon is a pretty smart thing, but more than that, it's the level of intensity. I mean, to again bring it back to the speed and intensity that he and the people that he hires bring to the team. And so, the first time we talked to that team, and they were telling us about the data center that they were going to build, and again, it's been very publicized at this point.
Yeah.
We were like, wow, like if you could actually do this, you would go from basically the starting gun to, being at the same level or possibly exceeding OpenAI in a matter of months in terms of model performance. And then they went and did it. Like they literally did it in like 3 or 4 months. And I think that type of intensity and speed and scale that only Elon and Elon-like companies can actually do, combined with the fact that they've got obviously this incredible distribution channel right out of the gate through X, and not just a distribution channel, but a really unique content set to feed off of the model, right? This model, unlike most other models, it has real-time information that they don't really have. And that real-time information also serves as a surface to trigger, usage of the product. Analyze this post, tell me more about this. So I think those are some of the factors that got us excited, and the team has far beyond delivered on what they said they would. So it's been really exciting.
That's great.
Yeah. What, obviously you can't share any details here, but should the broader market expect more foundation models, or is it kind of getting to the point, you remember in crypto, it was like, okay, we don't need another foundation level
like
blockchain.
L2,
we don't need another
L2s,
L1, and then you'd see one and you'd be like, really,
but this one built different.
Or do you think that, the 5 or 6 major players, Thinking Machines, XAI, OpenAI, SSI, are those like the labs that, we're sort of betting on? Or do you think there's room for more teams there?
The way we were framing this was like, if it is commoditizing, well, commodities are valuable. Oil is a commodity, and everyone wants to drill for a well. And
it's very
the more wells you have, the better. So get a bunch of wells.
Yeah, it's capital intensive, but if you put together a really great team, you could just start a new oil company and it ends up being worth something.
But what are you thinking about it?
Yeah, I mean, I think a few weeks ago, a lot of people wanted to have the debate about whether or not, DeepSeek meant that models were commodities and nobody should ever train foundation models again. I actually feel like that was the wrong conversation to be having. The way we think about it at Lightspeed is these companies are not just models. They are companies. They have distribution, they have customers, they have data, right? They have security, safety, like things that enterprises actually care about. And so, I think, should there be more models trained? Maybe, but I don't think a model by itself is necessarily interesting. I think there needs to be a product and a team behind it. And so I think if you were starting a model, if you were starting a company today that was training a foundation model, I think you need to either bring something very, very unique to the table in terms of what that model can do, or you better have some other advantage in terms of distribution or some sort of data that other players don't have access to, that lets you jump up ahead. And I think like that's an example of something Elon and the XAI team were able to do. They were able to build this data center in a way that no one else was willing to do to jump ahead, right?
Yeah.
So yeah, that's a little bit of the way that we think about it and talk about it.
Yeah, that's fantastic. You have any other questions?
I think we covered everything. It's been great having you.
Yeah.
We'd love to have you on. You know, when you have news with Oboe, new investments, things like that, come on. We're all about, conflict, right? So we want people coming on that have positions in the companies discussed on this show.
Highly conflicted.
So it's
no conflict, no interest, right?
Exactly.
Yeah.
That's our
we'll
motto.
have you come on, pump your bags, then we'll have your direct competitor come on, pump their bags.
Why not?
Have you both on at the
Shout
same
out to
time.
the guys in the cage, by the way.
Yeah. Thank you for coming on. Thank you for supporting the players, and we'll have you back on here soon. Have fun. Are you gonna go play some music right now?
I don't know. Maybe. Why not?
Generate some music.
Mess around with that Gibson in the background.
Yeah, generate some music. Honestly, skip the Gibson.
Wait,
just press a button.
You're in Boston. Are you staying through St. Patty's Day?
No, unfortunately not.
You got to go to Southie, get hammered on Guinnesses and throw up in the street like you're a Boston college student.
Yell about your striped secondary.
yeah, exactly. Yeah,
be fun in another timeline, maybe
in another life.
Yeah. I don't know if my wife. Hey, I decided to stay 5
St.
more
Patty's
days.
Day. There's a big parade. There's going to be green beer. There's going to be green beer. I have to drink it. I have to do a keg stand in Southie.
Exactly.
I'm sorry.
Exactly. Yeah.
Anyway,
she'll understand. She'll understand.
Great hanging out with you. Have a great rest of your day.
Great to see you, Michael.
We'll talk to you soon.
Later, guys.
Talk soon.